Hello and welcome back to another episode of Angel Insights brought to you by Syndicate Room. This is a show that delves inside the world of angel investing. However, with the summer and August upon us and the holidays planned, we thought what better way to prep you for the holidays than by coming up with a selection of our favourite quickfire rounds, revealing what the best books, blogs, podcasts, newspapers and more are from some of the world's best investors that we've had on the show, so you can head off on your holidays with the ultimate investor resource toolkit. And if you enjoy the show today, you can follow Syndicate Room on Twitter at Syndicate Room. But now it's time to open the treasure chest of resources. Get your pens out. Thank you so much for listening. Today we start off with Tim Mills, one of the main men from the British Business Bank, and what his must-have reads are. So your favourite investing or tech resource? It could be a blog, it could be a newsletter, a book.
A great question. You know, one of my favourite resources, just because it makes me look really broadly, is just reading the FT and reading the FT tech blog on a daily basis and just skimming through the headlines, because I think it's easy to get a little immersed in the tech press and look a bit too local in some senses in where we are, and it always gives you a more objective perspective on things, which I like.
Mm-hmm. Absolutely. And then what's the biggest challenge in your role today?
I guess right now the biggest challenge we have is simply we have a big portfolio of companies, and it's making sure that we're giving people the right support, the right resource when they need it, and that's it's always a stretch in terms of being able to do that. And I think one of the challenges for any investor is always knowing when you're adding value and when you're not, and when you're spending time trying to understand more about the companies you're investing in, more about the issues they've got. You may think you're adding value, but sometimes you're just distracting the guys that you're backing from doing the job. That's the thing that probably concerns me most, is how do we best deploy the resource we've got and use it most in the smartest possible way.
And then which investor do you most respect and admire in the European ecosystem, or in the US actually?
Yeah, I guess in the European ecosystem, I guess Robin Klein is probably the guy I would most respect. I think there's a certain sort of philosophical kind of connection between us. We run an early stage seed fund, generalist fund, and Robin has been one of the most prolific early stage investors, investing very broadly in the UK, and obviously has backed some fantastic companies. So yeah, I think Robin sort of demonstrates that really doesn't matter how smart you are, then it's really hard to pick the winners in any sort of absolute sense. So you've got to have a broad portfolio if you want great successes, but if you do have a broad portfolio, then you can have some great successes.
Mm-hmm. Absolutely. And then I want to finish on the most recent investment of yours and why you said yes, public one that is.
So we've got an investment actually which we just closed this morning, which is in a company called 4040 Media, based up in Southport. They develop trainer videos, so animated videos which go on websites and are used in corporate trading. So you're probably seeing things like RSA Animate, but those kind of elements. A great team, as I say, based up in Southport. Why did we back them? I think fundamentally the thing we liked about the business most is a really driven entrepreneur, a guy who really, really lives and breathes his business, has taken it from absolutely nothing to the scale it's at today with more than 50 employees, and somebody who's really got incredible ambition for where he can take it. They've got a great product offering, which obviously is essential to get comfortable with it. And though they're based up in Southport, which I've got to be honest, it isn't the most obvious place for a business like that, and did give us some concerns. Can they really scale in that market? Can they really attract the right kind of people in terms of helping them build out? But they have done so far. I think they've got the scope to draw on a wider resource. And if you look at their positioning, most of their business is actually outside of the UK. It's US focused, and I think that the possibilities there are tremendous. So for us, a lot of things to like about it, and ultimately we're a co-investment fund, so having the right partners to go in with on that was absolutely key, and we're very pleased that the guys that we've got involved with are going to be supporting the company, and they bring an enormous amount of experience in terms of scaling up early stage businesses.
Next, we have John Spindler from the London Co-Investment Fund revealing what his must-haves are. So your favourite investing resource, what's your kind of must-read when it comes in?
My must-read is get a great Twitter account, follow great people on Twitter. I'm amazed people don't. Follow your Mark Susters, your Dreesens, your Horowitzes, your Ben Evans. You learn so much more from those giants.
Absolutely. No, I'm a big fan of Twitter. And then commonality amongst the best investors that you've seen.
Basically, at our stage is, I think the best investors trust entrepreneurs, basically have a good eye and ear for a great entrepreneur, and basically know how hard it is to kind of start and then kind of scale up a great business. And they know that their role is really to support the team that they're investing in and not to try and shackle them.
And then the most challenging element of your role today?
In terms of running the fund, I suppose the most challenging thing is to basically find enough money for some of the great startups we do find, so they can fund it all the way through. I think there's a kind of my biggest challenge is to get enough money in their initial round and get enough money in their follow-ons in a quite challenging environment. That's I would say my biggest challenge. I think my biggest joy is the quality and the smartness and the intelligence and just the kind of fun you get by dealing with early stage startups who want to change the world.
What sector are you most excited by and why?
I think the sector we are seeing the most interesting, most amazing things at the moment in London is AI, and particularly machine learning. We are seeing what capability it's able to have, some of the big breakthroughs that have occurred in the last 2 years. So yes, that is by far, I think, the most exciting one I see on a daily basis. Some of the problems they're solving are quite amazing.
And then the next 5 years for you and for London as a tech ecosystem, what's the kind of roadmap?
Well, let's hope we vote to stay in Europe in a few weeks' time.
Fingers crossed.
And after that, I think it's incredibly positive. I think the kind of the thing that may start to occur, I'm hopeful, and probably little evidence to go for this, a faith pitch, is that we'll get all that enormous amounts of money that's in the London scene, in the pension funds, in the mutual funds, to start basically feeling that it's not right that only 1% of the London stock market is in tech compared to the States where it's about 21, 22%. And that actually kind of do something about that by investing in early stage funds.
Now time for Dominic Wilson, Managing Director at Pi Labs, to unveil his favourites. So let's start with, you mentioned tax reliefs. Is this dumb money, and is dumb money a good thing?
It is, on balance, yes, it is dumb money, and yes, dumb money is a good thing. So every investor round needs smart money, but you don't need 100% of your round to be smart money. So having some dumb money in there that's just going to give you money and let you get on with it is a good thing, yeah.
Mm-hmm. The effect of Brexit, what's going to be, obviously it's a guessing game now, but how have you seen it play out so far?
I think it's all a little bit too raw. I seriously doubt we're actually going to end up leaving the EU in any meaningful form, personally.
Really?
I can't see how that's going to be voted through Parliament, and nor the terms on which we're going to leave haven't been negotiated or unknown. So they start to present, a package to Parliament to be voted down to repeal the European kind of Communities Act of 72, and that's. If 95% of MPs are in favour of staying, then that obviously raises serious questions about whether that will actually get voted through, right? So I think the shockwaves from the last few days have been, significant. I think from a property perspective and from what we do, it's probably a good thing. And the reason for that is, venture is at the sharp end of the stick as far as risk is concerned. So yes, we're sort of high risk investors with very high risk, high rewards and high returns. But if if you go to the opposite end of the spectrum, which is your safe haven assets of equities and bonds, but if you look at the volatility in those markets, they're obviously not looking so secure. So actually, why not take the risk with the guys who are going to give you the greater returns, as opposed to the guys who are just going to perhaps lose a lot of money or just generate sort of 5-10% returns. So there is certainly that argument to be made. And lastly, coming back to what we were talking about before, this is definitely going to impact property companies, right, in terms of like how their asset price growth and their performance. So they're going to need innovation and technology more than they ever have.
And then what's the biggest challenge for you in your day-to-day role?
Several, really. I mean, I think for us, it's that we're a fund and we're an investor, and we have a lot of great momentum and great ambitions. So for us, it's matching the capital requirements to the deal pipeline that we have. We have far more deals that we want to invest in than capital that we have to invest, which is actually quite a nice problem to have. It's better that than the other way around. But we're looking to capitalize ourselves better in every respect, and to really make sure that we take full advantage of this sort of first mover position that we found ourselves in. So that's one. We are very fast and we're very nimble, and we implement extremely quickly, which is great. But some of our kind of counterparts, certainly in the real estate industry, as we alluded to before, perhaps not so quick. So managing those two processes in terms of like the speed at which we get things done and the speed at which they move is perhaps can be a little bit frustrating. But we're making inroads on that front.
And then I want to finish on your most recent investment and why you said yes.
Our most recent investment was an investment with one of the lead investors into Plantific, which is a home services, home improvement marketplace. The reason we said yes is because, for a number of reasons. One, it was an exceptionally strong management team, and that's normally the catalyst for most of our investments, to be fair. Two, they had some incredible partnerships with the likes of Zoopla and a few others that I can't really name at the moment. And three, their quality of product and their speed of product development was far ahead of anything else in the competition. And they sort of overcome problems that their competitors had traditionally struggled with. So, it was one of those deals that was kind of a no-brainer. I mean, it wasn't a no-brainer, but everything we looked at came up very, very well. And from a referencing point of view, I don't think I've ever had a better set of references, and we referenced them quite heavily. They're just a very, very strong team, and very, kind of very clearly focused on execution, which is something that we value quite highly.
Moving swiftly on, what does the woman behind one of Europe's largest startup PR agencies read? Time to hear from Collette Ballou at Ballou PR. So let's start with one of my favourites, which is your favourite book.
Oh my God, there have been so many books over. I'm supposed to choose just one?
Yeah, actually.
For investing.
For investing, or it doesn't have to be, actually. It could just be your favourite book. Let's leave it as general.
Oh my God, there's so many. You know what? Okay, I have to say, right now, my favorite book is History of a Pleasure Seeker by Richard Mason.
Why is that?
You got to read. Well, number one, I've invested in him, and he's an award-winning novelist. I think he started his first book when he was 16. I think it was published when he was 20, when he was at Oxford. And I think he's brilliant at studying people. He surpasses me, and I thought I was pretty darn good. So that is my current favorite book, but there have been so many over the years. I mean, in fact, I only recently got into fiction again. I've been a huge nonfiction fan, so I especially love reading the history of cities. I'm currently reading a book called How Paris Became Paris, but I love reading the history of any city, because I'm always fascinated with why it is the way it is. I also, way before the musical came out, read Hamilton. I'd like to say I read that first. I read it way before Lin-Manuel Miranda read it. I love biographies and histories. I just think it's fascinating to hear the stories of people. So read Hamilton, read the history of George Washington. I'll read even off the wall things like sometimes I went through a silent film thing where I read the history of Theda Bara. I mean, just really random stuff. Rudolph Valentino. I mean, stuff that nobody in their right mind reads.
Then the most common mistakes you see startups make, what is it that they're
not focusing on sales? If you don't sell anything, you can't, especially right now when we're seeing kind of another drought coming, you have to figure out what you're selling and to whom and how to get to them fast. It's so basic, and it's what drove Ballou PR. I mean, the beginning of Ballou PR had me sitting alone in a garret apartment in Paris, cold calling and cold emailing, doing my research, knowing why they needed what we were selling, and setting it up and making it irresistible, making it absolutely impossible to ignore the contact because I was so spot on with the problems I saw and how communications could solve it. Exactly the same for startups.
What's the best advice ever given to you? Another tough one.
2, nobody likes a messy cap table. So that's number 1. Number 2, don't let anyone ever mess with your margins. That's next to sacred. Everyone's always asking for a discount. They're asking for work for free. The advice that was given to me in particular was never give away your time. Don't discount. Pardon me. Don't discount. The advice is this: don't discount your rates. Give away free time when you see fit, but never discount your rates. Once you start discounting your rates, it's a slippery slope.
Mm-hmm, absolutely. And then what about the most challenging element for you today in your role running Ballou?
I have a motto, which is hire great people and then get out of the way. And hiring great people, happily, we've been able to attract them and just getting even more and more out of their way. Also balancing. I am the head of Ballou PR, and I'm also angel investing. So really just balancing out that time and carving out time to be creative. And I know this sounds like every top list of, advice for yourself, but you really do. If you do it right, the angel investing gives me ideas about the business. Ballou PR gives me ideas about angel investing and how I can help my portfolio companies. And I'm incredibly hands-on. And I also just think that, let me restart just a quick second. The most challenging part of my role is hiring the great people and then getting out of the way. I've been learning how to get out of the way and how to let people run things for years. And I think I finally struck the balance. And when I get out of the way, that allows me to go and do other things that can then feed back into the business better. So the more hands-off I am at Ballou PR and not sticking my nose into day-to-day running of accounts, which I don't do, the better I am or the more time I have to go and angel invest. And when I go and angel invest and I sit down with my portfolio companies, the lessons I learn there, I'm often able to reinvest into Ballou PR and vice versa. And that's hitting that balance has been very hard, but it's been incredibly rewarding.
And then penultimate question, and one I'm very intrigued by myself, is with the rise of Twitter, does it make, and kind of the frictionless and ease of it for any of your clients to tweet whatever they want, does it make PR infinitely more challenging?
Well, especially if they tweet something insane.
Yeah, if you've got Mark Andreessen as a client, I mean, it's a nightmare if you're his PR. So how do you approach that?
Well, you don't know if that is carefully orchestrated, Harry. You don't know.
It's a very good branding exercise.
It could be. It's Twitter. I always liked how Twitter opened things up and made things a lot more democratic. It used to be that communication from companies went one way. They communicated to you. And I think it's wonderful that there's been a happy back and forth. I'm really excited, actually, that there's been a happy back and forth because I think it makes companies far more responsible. Yes, it absolutely opens up problems, but it's on the whole, I think it's for the best. It does make it more challenging, but it also can make it the communications are far more rich and meaningful. frankly. And that's what I like. I mean, I think every single one of our portfolio companies has its own personality and integrity. And, Twitter is the kind of thing where if you use it correctly, not just, use it for company purposes and send out links to all your press releases and humble brags or just outright bragging. I think it can really bring a wonderful personality to the founders, the management team, and the company itself.
And then I want to finish today on your most recent angel investment and why you said yes.
So my most recent angel investment is Orson. And I had just mentioned that to you. It's a software company. And the entrepreneur is the author I mentioned, Richard Mason. And frankly, I've met many entrepreneurs. I took one look at him and knew this fellow can do anything. He will just get it done, and not in kind of a maniacal, crazy way, just with calm and poise. He knows what he's capable of, what he's not capable of. He's incredibly aware of his strengths and his weaknesses. He knows how to go and hire for those weaknesses, and again, like me, to get out of the way. And he's also incredibly good, and this is something that a lot of founders miss, he's incredibly good at using his network. He knows exactly who his network is and how to call upon them appropriately for this, that, or the other, for introductions. I had advised him to go attend the Founders Forum in London 2 weeks ago. He found a way to get into it. I mean, the man is just unbelievable. And, I honestly think he could have come to me with a business plan that was selling ice to Eskimos, and I would have invested because he's that good.
And what better way to finish the show today than hearing from Syndicate Room founder Tom Britton on the lightning round of his episode. So your favourite book at the moment and why?
So I just read Talk Like TED. The author did a lot of reviews of people who have given TED Talks. I'm sure you're familiar with TED Talks, and kind of the reoccurring, not themes, but trends and how they engage people. And I thought I wanted to improve how I present Syndicate Room to people. So I picked up that book, and it was really useful. And this last week when we did our big presentation, our big summit, if you want to call it that, and I had to give a few-minute talk, I took a lot of the lessons from that book and from watching far too many hours of TED videos. And I was told that I gave a good presentation, so it was definitely useful.
And then highlighted the entire Syndicate Room experience for you?
Going back to that day where I decided that I didn't want to take a corporate job and that I would give the entrepreneurial thing a try. I had tried to be a part-time entrepreneur a number of times before that and didn't fully commit, and the businesses didn't work out. So that moment when I fully committed to it was, I hate to be cliche, but liberating in many ways. So.
And then your favourite blog or newsletter, what's the must-reads for you when they come in?
I've been reading, newsletter-wise, it's CB Insights. I think the data that they provide is incredible, and the insights that they add to it with a bit of humor is fantastic. And I've been reading a lot of Both Sides of the Table, which I know a lot of people talk about. So those two of late have been my favorites.
And then the biggest mentor to you and how it came about?
Yeah, my biggest mentor is my old boss, actually, at the train line. So he had been a successful entrepreneur before. He had experience in everything from startup to company that has sold for £500 million. And he's just a wealth of information. And he's probably one of the few people who I go to who I know is not going to just blow smoke up my ass, sorry for swearing, and tell me how it is and tell me where he thinks I'm making mistakes and where I can improve. And you definitely need someone like that on board. And
then the final one, the next 5 years for you and for Syndicate Room.
Yeah, so this round that we raised is all about scaling up the business. Really, we're going to spend the next year focusing on growing our public markets offer, increasing brand awareness around that. And then we're going to start to look at other types of asset class that we can get into.
We so hope you enjoyed the show today, and next week we will be back interviewing, and we will have our episode with Fran O'Brien at Syndicate Room for you, where Fran will unveil her DD process for prospective companies, how she sources companies, how she really compiles the research and the DD itself, and much, much more. As always, we're so grateful for all the support, and stay tuned.